Welcome back to the channel, everyone. Today I want to talk about why I personally am not selling my AMC APE dividend and why I think it's terrible for the shorts and could cause the squeeze. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Gollum Stocks tweeted this extract from Seeking Alpha that talks about why shorting preferred stock is a bad idea. It said shorting preferreds is playing a dangerous game. Their lack of liquidity and usually generous dividend distributions serve to increase that danger. And the increased possibility of a forced closeout of a short position serves to increase the already increased danger. It says specifically, in addition, for heavily shorted stocks there's a risk of a buy-in. This refers to the fact that a brokerage can close out of a short position at any time if the stock is exceedingly hard to borrow and the stock's lenders are demanding it back, aka a share recall. Now on top of this, there's an entirely separate rule and regulation away from regulation SHO and away from those failed to delivers that talk specifically about forced closeouts for failed dividends, but I'll touch on that later in the video. First I want to examine whether APE is indeed hard to borrow or whether it's very easy for these shorts to borrow APE. This screenshot from Matex shows the cost to borrow for APE, and I also want to talk about the current cost to borrow for AMC as well. The current cost to borrow average for APE is 79.92%, which is absolutely sky high. The average cost to borrow for AMC is only 16%, which comparatively is still very high compared to AMC's borrow history. This makes APE very, very difficult to borrow indeed. On top of that, people still haven't received their APE shares, and what's going around so far is mostly only IOUs and fake shares. Therefore, true APE shares are very, very difficult to come by, very difficult to borrow because so far not even all of the shares have been delivered. You may remember yesterday roensch Capital tweeted about how he was selling all of his APE shares. The Wooston actually replied saying, "You know that APE was specifically designed to squeeze in 90 days, right?" Josh obviously replied saying, "I'd love to know more about this, Houston. Fancy elaborating a little? Thanks in advance." Wooston replied saying there's only 516 million APE shares. Everything else is a synthetic or simply an IOU that has a default clock of T+90. He said if the short hedge funds don't provide a real APE share to replace the synthetics or the IOUs at 90 days, they get liquidated and forced to buy them. That's the entire reason they were made. Now this is entirely separate from the T+35 deadline for FTDs that can obviously be can-kicked and hidden in the options chain. This actually relates to FINRA Rule 11880, which was discovered by Beats and Betts, but again I'll touch on this a little bit later. Emmanuel asked Wooston what the difference between a T+90 and a T+35 failed to deliver actually was. He said a failed to deliver is a stock that was sold and not delivered, aka when the shares haven't been located before being sold or shorted. But this is actually a default on a payment in lieu, aka a default on the payment of a dividend. The extract from FINRA Rule 1180 says syndicate members record the expected payments from the syndicate manager as receivables on their books, and records but generally do not receive the payments for up to 90 days after the syndicate settlement date, as currently permitted under FINRA rules. So obviously these syndicate members or these brokerages or trading platforms record the expected receipt of a dividend onto their books, but obviously they typically do not receive the cash or the actual dividend for up to 90 days unless the shorts are closed out in that time. And he says if you borrow a stock or naked short sell that stock, then you're financially responsible for covering any and all dividends via payments in lieu. He said if you don't cover those, aka pay over that dividend or close out of your short position, then you're in default and the accounts can be frozen, assets liquidated and positions closed by your broker. Now obviously these shorts can't provide hundreds of millions if not billions of APE dividends to AMC shareholders because obviously there's not enough APE to go around, and therefore they have 90 days to close out of their short positions or provide this impossible dividend, otherwise they end up in default and are forcibly liquidated. And as a perfect example of this, Bruce Wayne or AMC supporter tweeted saying Overstock took 90 days exactly to go from $10 to $130 after its IPO. So it seems Overstock had a very similar case of T+90 after being issued as a special dividend. Now, on top of this, Jersey Mike tweeted this screenshot at Adam Aaron showing just how desperate the shorts really are to get hold of their ape and to push the price of ape down to encourage more selling. This screenshot shows in the after hours 363,000 apes being sold or shorted, 1.8 million shares, 862,000, 2.1 million, 1.8 million, and even more shares. Now that's nearly 7 million shares being sold or shorted straight after the bell, which is very, very interesting because ape is almost impossible to get hold of and it's very, very difficult to borrow. That's clearly a sign of more IOUs being issued or more synthetic ape shares being created and shorted to push the price down. Again, I think something so blatant as shorting 7 million shares after the bell just shows how desperate these shorts really are to push the price down and encourage more people to sell. We've also got further confirmation of these IOUs existing and being issued from Stake. Stake sent this email today, this morning or Wednesday morning, talking about how shares of ape were only received via the DTC from ComputerShare on Tuesday. And they said yes, regarding IOUs or phantom credits, this is most likely the case, as no brokers actually received the underlying stock until yesterday on Tuesday. They said we even reviewed communications sent on the 22nd, aka sent on Monday directly from AMC's investor relations with one of our clients, where they had noted that shares would be delivered, implying that shares on Monday had not been delivered just yet. Brokers facilitated trading on the 22nd on Monday because that's when it was filed to trade on the New York Stock Exchange, but obviously shares weren't actually delivered until Tuesday. And this is why I personally haven't and won't be selling my ape shares. Ape is very difficult to locate and short, and there's potentially this T+90 deadline per FINRA Rule 11A80 that basically means these shorts have to close out of their short positions or they'll be liquidated. And on top of that, Colin tweeted saying there's people out here like Lou versus Wall Street, like Matt Kohrs, like Meet Kevin, like Roensch Capital and Short the VIX that are selling their ape shares while the CEO is collecting his. Now, I personally haven't been convinced, I haven't been swayed, and I haven't been paid off by the shills to sell my ape and to preach to you guys to sell your ape as well. However, saying that, if there is any hedge fund managers out there that want me to sell my ape, my business email is in the link in the description below if you want to help me retire to a nice island. And guys, if you see me posting a video in say 2 or 3 hours from a nice island in the Maldives telling you guys to sell your ape shares, you probably know what happened. One good sign is that one of the largest voices in this movement is saying that ape is actually the solution and not the problem. Guys, don't overcomplicate it. I personally think that Trey is absolutely right with this statement. Ape is the solution. It's not very difficult. You just hold your shares that you've been given for free. And finally, there was a very interesting tweet from Rocket Astronaut, which has since been deleted, where he suggested that this could be the short's final attempt to shake us before Adam Aaron requests the distribution records from ComputerShare. Could you imagine what would happen if ComputerShare told Adam Aaron that they had sent 200 million shares to Fidelity, 200 million to Moomoo, and a final 116 million shares to Charles Schwab, and that was it? You'd have tens of thousands, hundreds of thousands, if not millions of customers on all different brokers across the world, spanning from Robinhood, Webull, TD Ameritrade, all of these Canadian brokers, UK brokers, and European brokers that had somehow received ape shares, even though ComputerShare didn't deliver them. ComputerShare obviously have a record of exactly where these shares went and how many shares went to each brokerage, and it'd be incredible to see if there is some brokerages like Robinhood that didn't receive a single ape share, but yet managed to distribute ape to hundreds, if not thousands, if not potentially hundreds of thousands of customers. That'd be absolutely incredible if Adam Aaron can request these records and if ComputerShare actually have the records or if they've sent them off to the DTC. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers. And guys, if you haven't already, be sure to sign up to Moomoo right now using the link in the description below. You can currently get 10 free stocks worth up to a whopping total of $25,000. Moomoo is very easy to use, it's incredibly customizable, they've got tons of technical indicators and advanced charting tools. From Moomoo's latest customer agreement, they officially state they do not sell your order flow to market makers like Citadel, and therefore Moomoo is brilliant for buying those AMC and GameStop shares. On top of that, Moomoo was one of the few brokers that managed to distribute all of their ape shares on Monday to customers before the market opened.